Reserve Bank is expected to cut the interest rate tomorrow to boost economic growth. Now, most analysts are convinced the cut will be at least half a percentage point. But the bank's been conservative in the past, keeping the rate high while the economy struggles. To discuss this now, I'm joined by economic advisor at Optimum Investment Group, Roelof Botha. Roelof, good evening, and thanks so much for your time. Now, you've written an article talking about, why this cut is actually needed. But you want an aggressive cut. But, we've been warned by the Reserve Bank and the Finance Minister, well, just a few days ago, in fact, that our problems are not for the Reserve Bank to solve. So why the call for an aggressive cut if it's not going to go a long way to solving those problems?
Well, there are two issues here. The first one that everybody's talking about, the possibility of a 50 basis points cut, is related to the coronavirus and the pandemic and what's happening to the economy, which is going to take a hit. But in our paper, Prof. Ilse Botha from UJ and myself, what we did is to try to establish what the prime rate should be in South Africa. And the real prime rate, that is now the prime rate minus the CPI, during the previous governor's term of office was on average 3%. And this economy grew at 2.6% per annum on average. And then the minute she retired, the new Monetary Policy Committee, whom, to the best of my knowledge, were all appointed by Jacob Zuma, decided to just forget about the second part of the mission statement, which is growth and employment creation, and just focus on trying to get ultra-low inflation. For whatever reason, I don't understand. It's incomprehensible, because they increased the real cost of capital in this country by 100% over the last 5 years. And we were terribly concerned about the fact that this has an inverse correlation with GDP, which is predictable. So we asked the econometric model to tell us what would our GDP have been if the real prime rate had stayed at 3%. And we would have had a GDP which is 560 billion rand more than it is today. And we would have had literally hundreds of thousands more jobs being created in this country. So we need a structural adjustment, a very deep cut of at least 200 basis points.
So, Roelof, just help us understand. The understanding out there is that interest rates are there to control inflation, the rate of inflation as well. And the last thing we want is for poor people to feel the price increases. And that will undoubtedly happen if we were to get those cuts.
I'm as concerned about the poor people as anybody else. Now, the reason why many people in this country are going to sleep hungry tonight is because the breadwinner does not have a job. And I can guarantee you that the reasons for the little bit of inflation that we've had in the last couple of years were related to the drought in the Western Cape and other parts of the country. They were related to temporary, in every instance, exchange rate weakness, and they were related to oil price shocks from time to time. We've got the opposite right now. Now, I want to find out from the MPC how a higher prime rate will make it rain in this country. We have a demand deficiency in South Africa. Stats SA tells us that almost 20% of our factories are standing empty, and the reason is there is not sufficient demand. They've been asleep. I call them the Rip van Winkle crowd, the MPC, quite frankly. We need a deep cut in interest rates so that we can create jobs. And the more jobs we create, the broader the tax base. And then government can do something about the poor.
Okay, well, I do get your points, and I do get what impact it might have on some level. But if we have to look at the rand today, Roelof, breaching that 17 rand to the dollar mark, and the understanding is that investors want high interest rates, and to be able to deal with this. Wouldn't a drastic cut be damaging for the rand in itself, which will have a wider impact on the country?
The rand's movement right now has got absolutely nothing to do with our domestic policies. It's a dollar story for the last 4 to 5 years, and obviously it's related to the coronavirus and the sell-off of emerging market assets. We've been caught in this conundrum, and it will pass. I can guarantee you. I can almost guarantee you that the rand within a couple of months will be back to 15 or even below 15. This is a temporary phenomenon. What investors want is they want an economy to grow. This economy is not growing. What investors want is dividends on their investments. And our dividend yield has been declining. So, quite frankly, if you trace back one of Moody's statements on South Africa about 2 years ago, they said exactly what I'm saying tonight. They were questioning the Reserve Bank's restrictive monetary policy when every other central bank in the world, especially in emerging markets, was following policies designed to stimulate the economy. They were doing exactly the opposite. I must tell you that if you look at my paper, the title is that the policy is bereft of reason, and I stand by that.
So these deep cuts that you're calling for, would these be on a temporary basis till we get back on an even footing, till we balance things, or would you want to see this as a sustained way to do things?
Until such time as government has addressed the structural problems in the economy. I mean, I agree with the Reserve Bank that monetary policy on its own cannot fix the structural problems that we have, especially with regard to a rigid labor market and supply-side problems. Now, that can be addressed, and our new president, Mr. Ramaphosa, and our Minister of Finance, they have put a fantastic plan on the table. But it will be much easier to implement that plan if the economy starts growing. So all I want is this country to go back to the policies followed by Jill Marcus. I'm asking for a real prime rate, approximately of 3%. This is not so difficult to understand, quite frankly, or to achieve. You can do it tomorrow. If I was the governor of the Reserve Bank, unfortunately you can't vote for me, I would lower the prime rate tomorrow. The prime rate, well, the repo rate, the prime rate will follow within minutes, of course, to a level of about 7.5%. We need a prime rate of 7.5% given the very low inflation we've got now.
All right, well, maybe, Roelof, tomorrow will be the start of your wish coming true. Let's wait and see. Thanks so much there. That's Economic Advisor at Optimum Investment Group, Roelof Botha. Still on